Welcome back, everyone. It is time right now for our triple play where we put 3 stocks on your radar going into the close. We've got just about 23 minutes left in today's session, and I will kick things off for us here today. Apple is on my radar, and unfortunately they're down right now. But it's on my radar for the reason that Warren Buffett, in his letter to shareholders, which came out over the weekend, talked even more about their ownership in Apple. 5.5% of Apple is what they own, and so that's up from a year earlier. But it's remarkable what they've continued to praise from Apple and about Apple's leadership and Tim Cook. They've said Tim Cook, Apple's brilliant CEO, quite properly regards users of Apple products as his first love, but all of his other constituencies benefit from Tim's managerial touch as well. Now, it's noteworthy here as we've been tracking Apple for Berkshire Hathaway and what it means to their portfolio. They actually said that Berkshire, they actually didn't have to spend any additional funds to get this accretion, and that it was all through really Apple share repurchases doing the job there. And so there you're taking a look at Apple shares over about the past 5 years. We do know it was a position for Berkshire Hathaway that wasn't necessarily initiated by Berkshire's founders and CEOs, Warren Buffett and Charlie Munger, but one of the other associates within the company, fund managers in the company, and it's paid off quite well for them over the years.
Absolutely, Brad. And I do think that is the thing that has been the most interesting about this Apple holding for Berkshire. Beyond the sheer size of the stake now is the fact that Warren Buffett and Charlie Munger have often admitted vocally to having a relatively more limited knowledge of the tech industry relative to their more limited company holdings. Of course, they've gone on to invest in a number of other, or Berkshire has gone on to invest in a number of other tech companies from that point as well. And many of them have been quite lucrative. Of course, Apple now comprising one of the largest stakes for Berkshire Hathaway. And again, these praises that we've been hearing from Berkshire, from Warren Buffett, and from Charlie Munger about Apple CEO Tim Cook are ones that they've reiterated several times now. Charlie Munger even told our own editor-in-chief, Andy Serwer, in an interview earlier this month that Apple is, quote, ungodly well managed. He also said, quote, I've got zillions of friends who'd almost part with their right arm before they part with their iPhone. That's a hugely powerful position to be in. So certainly something to watch with those trends in Berkshire Hathaway's holdings of Apple and others, of course. But shifting gears here, the stocks that I'm taking a look at today, and I do say stocks plural because I'm taking a look at both Dollar Tree and Dollar General. So 2 stocks within this dollar store, discount retailer part of the universe. And now not a huge amount of movement in these share prices today, both moving slightly to the downside, but these are going to be ones to watch according to a new note from Bank of America, because these companies could be some of the most deeply hit by rising gas prices. Now, according to B of A, historically significantly increasing gas prices have negatively impacted dollar stores' relative stock performance and comparable same-store sales relative to other retailers. And why that's the case is in part because rising gas prices means less discretionary income left over for those shopping at these discount retailers. And plus, this would also compound with supply chain disruptions and inflationary pressures already being seen by a number of other retailers as well. So definitely something to continue watching here for the retailers overall, but especially for these off-price ones like Dollar Tree and Dollar General.
And you have to keep in mind that at the peak of the pandemic, it was these Dollar Trees and Dollar Generals that were really the lifeblood for people, especially a lot of these based in a lot of rural areas and perhaps towns that don't have access to fresh food and grocery stores. And we are seeing that the inequality crisis is only deepening, and that could create even more of the company's core customers. But obviously, as they had to raise prices, as more of the pressures weighed on them from inflation, it'll be interesting to see then if they end up lowering prices as inflation also trends down. Now, the stock that I'm watching is Teladoc Health, and that was actually trading back at pre-COVID levels despite forecasted strong growth. Now, the stock rallied in early trading before paring back a little bit, and that was after it announced that it was teaming up with Amazon Alexa and Echo devices in a move that would make healthcare more accessible. And, you know, whether or not you have insurance or not, you could still be able to access it. And this also expands on Amazon wanting to really expand in the health space. We know that it's been trying to expand in the pharmaceutical space. Now, its Q4 of 2021 got a boost from the Delta Omicron variants when they were surging. But as we know, COVID rates are starting to slow. So we'll have a better idea, though, of where it's headed when it gives its Q2 22 guidance after its April's earnings call. But a really interesting one to watch.
Yeah, it seems like at least for the full year of 2022, revenue guidance is pointing towards 2.55 to 2.65 billion dollars, and that would be about 20 to 30% growth. But particularly, what we've seen is companies who are either in the fit tech space or in the healthcare or health tech space. They're leaning more into some of the devices that are already in home, and we've seen that leveraged through some of the other fit tech companies trying to attach that to Alexa skills. And similarly, so it's only right that we're going to see that even more with some of the health tech plays, Teladoc being one of those major ones, and continuing to see some of their year-over-year visits grow, both on a quarter-by-quarter basis, where in the fourth quarter they saw that grow in those visits. Total visits increased 38%. And so we'll see how that continues to move forward, given the full-year projections and revenue guidance that they've provided at this point.